Welcome to Crypto Flywheel, podcast where we spin up strategies to turn your digital efforts into unstoppable momentum. Now, let's get that flywheel turning. So imagine you want to open up a lemonade stand, but nobody ever told you whether you need a permit, a business license, or what. And instead of telling you the rules, the city just waited for you to set up your stand and then fined you. That's basically what's been happening in the crypto for over a decade. Well, that just changed big time. SEC Chairman Paul Atkins just stood up and said, "We're starting all over. Here are the actual rules." People are calling it the roadmap to clarity. And honestly, that name says it all. For the past time, crypto builders in America have mapped. Let's walk through what actually in it. Okay, so here's a big question that's been haunting crypto forever. Is this thing a security? Why does this matter? Because if something is classified as a security, like a stock, it has to follow a whole mountain of rules, register with the government, file reports, the whole 9 yards. For years, the SEC was basically pointing everything in crypto and going, yep, that's a security, and that too, and that too. Now, they've actually built a sorting system. Think of it like a menu with 5 categories: digital commodities, digital collectibles, digital tools, payment stablecoins, digital securities. The massive breakthrough, Atkins literally said out loud, most crypto assets are not securities. So we have the big 4 flagships that are commodities. That's Bitcoin, Ethereum, XRP, and Dogecoin. The rest of the coins on that official list is also considered a commodity, which are not the larger size coins, but they could be. One is Solana, Cardano, Chainlink, Avalanche, we got Polkadot, we have Hedera, Litecoin, Bitcoin Cash, and some of your favorites, Shiba Inu. Then we have Stellar, Tezos, and Aptos. So that's one sentence just lifted a cloud that's been hanging over the industry for years. So here's a problem that existed forever in crypto. How do you test a new idea if it's following all the rules? Costs millions of dollars before you even launched. It's like telling a first-time chef they have to pass a 5-star restaurant inspection before they're allowed to cook their first meal. So the SEC is creating what's basically a sandbox, a safe, time-limited space where you can launch a new token, raise money for investors, test out a new concept like DeFi or staking, all without having to jump through every single regulatory hoop up front. So small startups can even raise up to $5 million under this framework without full registration. Bigger projects get their own pathways too. The whole point is build here in America where we can see you and protect people instead of running offshore where there are 0 rules. So this might be the most important one for everyday builders. The old strategy is this real? This actually happened. Was called regulation by enforcement, or as some people call it, regulation by subpoena. What does that mean? Instead of publishing rules and saying, here's what you can do and can't do, the SEC would just watch, wait, and then once you built something, they'd show up with lawyers and lawsuits. It was the equivalent of driving on a highway with no speed limit signs and only finding out you were speeding when the cop pulled you over. Atkins called this approach misguided, and he's replacing it with something totally different: actual conversation. The SEC will now try to work with builders to help them comply instead of ambushing them after the fact. So to be clear, if you're committing fraud or manipulating markets, they're still coming for you. But if you're a good faith builder, just try to do things right. You now have a friend at the table instead of an enemy waiting in the shadows. So what does this all mean for regular people like you and me? Here's a simple version. Crypto companies can now legally build in the U.S. without fear of random lawsuits. New projects can get fair shot to test ideas before going all in. Investors get more protection and more options because innovation stays here instead of moving to places with 0 oversight. So in the U.S. is now actively trying to lead in digital finance and not trying to block it. So this is genuinely one of the biggest regulatory moments in crypto history, not because of technology changed, but because the government finally showed up with a rule book instead of a subpoena. And for anyone who's been watching this space and waiting for things to get clearer before jumping in, the fog just has been lifted.
Yeah. So that was quite an opening there, Digital X. I agree. I mean, this day, March 17, 2026, equals an inflection point when what just happened. Regulatory clarity for sure. Right? That's what the Securities and Exchange Commission, in partnership, alignment with the Commodities Future Trading Commission, they just created a formal token taxonomy. They declared most crypto assets are not securities. Of course, they just named 16, but you know that pretty much what they're saying is most. So as long as what Digital X just said, as long as there's integrity in your project, namely the real world asset tokens that are going to be launched, all of those done appropriately, there's governance now through CFTC and SEC. So long as you deliver on what you're saying that you're delivering and you're solving an issue with the real world assets, now you have a trusted stock market without the governance or the red tape that is associated with it, right? So that's essentially what has happened. So structurally, this is not a crypto event. This is a market structure reclassification. Before, everything was treated as potential securities, and to now, and regulatory ambiguity with capital hesitations. People didn't know if they wanted to, invest their money into it because they were scared, and they were dubbed. It was dubbed crypto. Well, with the Wild Wild West is crypto, but now you have clear segmentation. It's now digital commodities, not digital securities. Right? And now stable coins are in the mix. There are digital tools and ecosystems that are being built around this. So what is out? This is all translating out to be legal and legible to institutions where there's going to be a ton of money coming into this marketplace. And for our listeners, this is that inflection point, guys. This is where if you were thinking about getting in and haven't as of now, right now, while as of today, still we have discounted rates. So on all these digital assets. So if you have, this is not financial advice, but you were thinking about investing into this digital asset category, it's time to responsibly invest into it, whatever that number is for you. So you want to get some yield for long-term yield, this is the time. So that's what I got to say there. I'm Digilux.
Yeah, so Professor Rex, do you have a exchange that you recommend or?
Well, in line with what we talked about today with Clarity, there's a couple, of course. My go-to is Coinbase, and then I also use Gemini. And then, of course, we have Kraken, and then a couple of others. I believe, was Crypto.com also included in that, or no?
Yeah, Crypto.com is actually a legible exchange. So is Kraken, Coinbase.
Yeah.
Which you've listed are pretty secure. But even though they're secure, take your cryptos off those and put it into your cold store wallet.
100%. I agree with Digital X on that. Do not leave it on the exchanges. Put it onto a cold storage wallet, guys.
Yeah. So this overall response from Paul Atkins actually solidifies this industry. So with him saying that, Clarity Act is just around the corner. That's what I truly believe. Otherwise, he wouldn't have made that statement. So markets may start seeing green soon. So
and another thing is that we have to also stress again. I'm stressing this again because this is the migration of speculative assets. I keep on saying there's no longer speculative assets, right? The migration from speculative assets to institutional grade commodities. Okay. So this is like institutional grade. You know that the institutions don't invest into anything that's not going to yield them significant returns, right? So the transition from retail driven cycles to sovereign capital cycles. When you're talking about institutional money, you're not talking about the $10,000, $1,000 here, $500 there. You're talking about tens of millions into the centimillions of dollars, plus into the billions of dollars of investments that are going to be flowing through this space on a day-to-day basis from institutions, every institution. So this, especially with the emergence of the tokenized financial infrastructure. So you're talking about the volumes, current market cap sitting at around $3 trillion. You're looking at a 10 to 100x here in the next 2 to 5 years. That's my belief and my understanding of this. So that's all. Yeah.
I can visualize that. As long as they have that green light given to them, there will be capital that's going to be moving into the markets, and you'll see great price appreciation.
100%.
Professor X, you want to go ahead and flywheel out of here if you're all done?
Yeah, I don't have anything further to say, but I do want our listeners to engage further. If you'd like to comment on what you say, if you have any differences of opinions, you want to make a statement or something, engage with us. We will address it either in the comment section or in subsequent episodes. So with that, this episode of the Crypto Flywheel is signing off. Thank you, guys.
Thank you.